Hi there, welcome to kneppyinvests. In today's video, I'm going to talk about West African Resources, a gold producing company in West Africa, hence the name, Burkina Faso to be exact. And this company has been producing prodigious amounts of cash ever since they started operations about 18 months or 2 years ago. They've significantly decreased their debt and significantly increased their cash because of their operating cash flow. And in fact, in the June quarter, we saw another $120 million produced in their operations. That's not taking into account taxation. Now, when you look at the amount of cash flow this company is producing, including free cash flow, and look at the valuation of the company, you might think it is quite cheap. But there is a reason why it does seem cheap, and it has to do with sovereign risk. Because where this company has operations, Burkina Faso, they went through an attempted coup back in January, and that sort of thing could happen in these West African countries. So there will always be a discount when it comes to this company. And if you are able to manage that sort of risk, if you understand that risk and are wanting to take on that risk because you think there could be some good value here, I think possibly West African Resources is one of those companies you should have a look at. So I've already talked about how West African Resources have a gold production in Burkina Faso. Now, Burkina Faso is a landlocked country, and there seems to be a lot of mining operations in these West African countries, particularly Burkina Faso, Mali. And just because there is a little bit of, we'll say, I was going to say sovereign risk, but a little bit of instability in these countries doesn't mean or necessarily mean these companies will be negatively affected. West African resources have shown that in the past 2 years. However, on the flip side, you could also say we don't know what's going to happen in the next few years. There could be another coup, and that coup could be bad news for West African Resources and other companies that have operations in these sort of countries. Now, West African Resources was founded in 2006, listed on the ASX 11th of June 2010. The CEO and founder is Richard Hyde. He has a 2.2% stake in the company. Probably would prefer that to be a little bit higher, but I think I will get around that, because when you look at some of the shareholders in West African Resources, it's an impressive list. Van Eck, 11.8%, BlackRock, 1.3%, and Sprott, 7.7%. Just seeing some of the names on the shareholder registry does fill me a little bit of confidence. And the current market cap of West African Resources at $1.20 is $1.2 billion. And you can just equate, not maybe equate, but compare that market cap to the amount of operating cash flow in just the one quarter, 120 million. And you could see why I am trying to suggest that this company could be looking cheap at these current prices. But again, I will say this time and time again, you do have to take into account and give a bit of a discount to West African Resources because of the sovereign risk of having the operations in Burkina Faso. And of course, the T code of this company is WAF. Now let's have a look at before we have a look at the June quarter results for financial year 22, just want to go back 1 year ago to the June quarter of financial year 21. And there's a lot of things that do impress me in regards to West African Resources and the management of this company. And the management of this company have really focused on decreasing their debt and increasing their cash. And that is exactly what I want this sort of company to do, who starts operations in a mine and their focus is on decreasing their debt. That is exactly what I want a company like this to do. So if we go back to the June quarter 2021, receipts to customers, 158 million, and they were actually operating cash flow positive by $61.7 million in this particular quarter. But you'll notice the cash on hand in this quarter fell by about just over $30 million, from $93.9 million to $60.9. One of the reasons behind that decrease in cash on hand was because they repaid $67 million in debt in this one quarter. In one quarter. They also spent $15.1 million in capital expenditure. They had to spend $25 million or give $25.4 million of taxation to either the Burkina Faso government or the Australian government. Who knows? I don't know the tax rules at all in regards to this company. But still, after this particular quarter, even though they repaid $67 million of debt, they still had $161 million of debt at that point in time. If you take into account the cash on hand, that meant the net debt at this point in time was $100 million. So let's have a look at how this company has performed over the past year, paying particular attention to the cash flow, operating cash flow, and the debt levels. So as we turn our attention to the June quarter results for financial year 22, things are looking really good for West African Resources. Receipts up to 175.5 million. But if you just focus on the operating cash flow, you might think, well, that's a little bit low. It's only 40.7. I've already mentioned they were operating cash flow positive this particular quarter by 120 million. One of the reasons why I'm saying they were operating cash flow positive by 120 million is because they paid $78.7 million in taxation in this particular quarter. In the previous quarter, the March quarter, they only paid about $6 million in taxation. So I do think because of the lumpiness of taxation, you do have to round that out. So that's why I'm saying, in excluding it from the operating cash flow for that particular purpose. And that's why I'm saying West African Resources was operating cash flow positive by $120 million. So even though they did pay $78.7 million in taxation, they were still able to raise that cash on hand or increase their cash on hand and finished this particular quarter with $222 million of cash. The other thing you'll notice is that debt levels are down to $14.5 million. I think they have finished paying off debt because the debt levels have been going sideways over the past 3 quarters. They don't mind having $14.5 million of debt, which also means they have approximately $207 million of net cash. So the enterprise value of this company is actually less than $1 billion at this point in time. The other thing I noticed in this particular Appendix 4C is a slight increase. And when I say slight increase, I'm talking about $6 or $7 million, a slight increase in capital expenditure. So that is something the management can decide to do in the future in regards to their excess cash. They could start to spend more on capital expenditure. They could look at maybe acquisitions, dividends, share buybacks. So all that capital allocation decisions will have to be decided upon management. And I do actually look forward as a shareholder of this company, and I don't think I will sell my shares in this company for a while yet, simply because I do think it is good value. I'm really interested to see what the company does, what the management does with the cash on hand. Now let's have a look at the receipts and operating cash flow history for West African Resources. And this is a 2-year history. So they started operations in the June quarter of 2020, just after COVID-19. And we have seen receipts growing through time. There is a bit of lumpiness here. But the other thing is the company has been operating cash flow positive throughout the last 2 years. And the record cash flow has been as high as 138.6 million in the December quarter 2021. So this company is producing a lot of cash in their operations. They're also free cash flow positive. They have decreased their debt, increased their cash on hand. So very exciting times for this company moving forward. The only risk, or the major risk for this company moving forward, is that sovereign risk. So you do have to take that into account. And I do understand that is why there is a current discount to this company. And just to really emphasize, one of the main reasons I really like the management team of West African Resources is if we look at the debt and cash levels over the past 2 years. So if we go back to the June quarter 2020, at that point in time, they had $304 million of debt and $83 million of cash. So they actually had net debt of $220 million. So you can just see the debt levels fall consistently since then. Every single quarter, they decided to pay off debt until they came to the December quarter in financial year 2022, when they decreased their debt from 142 million to 13.8 million. So they decided, because they were producing a lot of cash flow, they could use that cash flow to pay down their debt. The other thing I paid attention to here is the cash levels. So over the first 6 quarters, the cash levels actually went down a little bit, all the way down to $61 million in the June quarter last year. And ever since then, cash levels have steadily risen. In fact, they've risen from $61 to $222 million. So this company is continually increasing their cash on hand. And at some stage, I have no doubt the company's manager will have some hard decisions to make in regards to what they do with that cash. And that's another, as I've mentioned already, that is one of the reasons I'm excited about the future of this company and excited to see what management do. Now, onto the daily chart for West African Resources. This goes back to February 2021. And if you have been following gold prices and gold companies over the past few months, you would have seen significant drops in the share prices of these gold companies and gold prices. And it seems like West African Resources has been possibly the least affected gold company on the ASX in terms of share price drops. Now, the share price has dropped, but nothing like we've seen with other gold companies. And I think one of the reasons why the share price of this company hasn't fallen is because of that discount in regards to the sovereign risk and how cheap this company looks based off their financials, based off their operating cash flow, based off their free cash flow, based off their enterprise value, based off their profitability, based off the amount of cash they have on hand. All those factors are the reason why I don't think this company has been affected by the decreasing gold prices. So if we suddenly see gold prices starting to rise again, which could happen at any moment, no doubt West African Resources share price should rise quite drastically from there. That's all I have for this June quarter Appendix 5B look at West African Resources, a gold producing company in Burkina Faso. And even though I am suggesting they produced $120 million in operating cash flow for the June quarter, if you take into account taxation, that number actually decreases to about 40 million. But still, they are producing cash in operations. They're still increasing their cash flow, even though they did pay down a fair bit of, or they paid a lot of taxation. So looking forward to what this company does over the next few quarters, the next few years. If you have any questions about this company, or maybe any other company on the ASX, just leave your questions, your comments, your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs.